interest rates are on their way down, or maybe they're not on the way down. We're going to look at some things. OCR, CPI, GDP, all of that right now.
So OCR haven't moved, right? So why interest rates are not gone down?
Yeah, well, if we look at some of the reaction to the OCR as of making this clip, we kind of had, okay, this graph here kind of shows you the 2-year swap rates.
Yeah.
And this is like right now. So some of the wholesale rates have actually moved up since the OCR announcement, which was to keep the rates the same. So you would think, okay, why? So if we look at the OCR and where it's been sitting at, this red line is the OCR, and this is around the start of the year, and it's stable since the start of the year. So why would there be an impact on the wholesale rates? It's around the language of what's accompanying the OCR. These are the fixed rates, by the way, the different term fixed rates, and these are kind of the specials we're seeing in-house. You can see that it's creeping down slightly.
Yeah.
Right? You might have seen that, the 2-year rate's looking pretty sharp compared to where it was like end of last year, right? It's come back a lot.
The question often customers ask is why 1-year rate is always high and the long-term rates?
It's kind of an outlook on what's going to happen with CPI later, right? So if we look at this graph, I think this kind of gives you a feeling for what the central bank is also contending with, right? This yellow line is actually the annual CPI or inflation. This yellow line is inflation, and this yellow line, ideally, the central bank's main target is to keep this down where it used to be before COVID, around here. But it is way up off that. Now, the actual tool for that is basically the central bank rate. And if we look at this, the central bank rate, as we've all felt, it's been cranking up. And along that journey, it does feel like it's having an impact on this. But everyone's prediction on what this will do is what decides the fixed rates. So having a short, a cheaper fixed rate might point to like there might be better chance of this being lower in the longer term than shorter term. This blue line, incidentally, is the GDP or the economy. So since you can see it's kind of crept into negative, that's what a recession is. Right, in some sense. But then when it's accompanied with a high inflation and unemployment, which we don't have quite yet, but then you would start calling it stagflation. We have kind of bits of stagflation here. This is the challenging thing for the central bank, because you can't fix these problems with just the interest rate. Because if you put the interest rate too high, then if this line drops down too much, that's severe pain. I don't think the central bank definitely doesn't want that. But if you don't have OCR at a high setting right now, then this starts to shoot up, which is even in some sense worse, because then you're losing value in currency, in the money.
So ideally, the aim of the RBNZ is to get between 2 to 3%. Pretty much
1 to 3% is what they say, 2% midpoint. But yes, correct. This yellow line has to be closer to where it used to be over here, and their mission is not over till then. So, do we see fixed rates that are lower then? Well, you can, because if you look at this is the OCR, right? And what have we seen? We've seen the OCR go up and stay stable, but at the same time, we can see all our fixed terms have slightly been creeping down a little bit.
It's shrinking a bit.
And that's really based on the actual wholesale rates. The 2-year swap rate, if we look at that over the last wee while, that's actually been dropping while the OCR's been staying stable. So, a lot to it. But, as always, if you think you like to know more about how long to fix for, contact us, a good financial advisor like us, right?
Of course.
We both happen to be financial advisors. We can kind of give you some guidance on what's a safe way forward through this.
Thanks for watching.
Thanks for watching.